feel like a broken record when I say this these days, but it seems like it always comes back to Trump tweets. But that's the world we live in, right? You see, no U.S. president has paid more attention to where the Dow Jones Industrial Average is on a day-to-day basis. And everyone wants the economy to do well. And the president wants to be in a growing economy. No one has ever shared opinions about where things are on a moment-by-moment basis as businesses are handling their day-to-day operations. Trump will be seeking re-election next year, and he's going to do everything in his power to make sure the markets reach higher highs in hopes of winning another term. The problem right now, though, is the tariffs on China and the trade issues. And I personally am in agreement that we need to play hardball with China, not just in this current situation, but always. However, this has been wreaking havoc in the market since March of 2018 when the subject first came up. And despite this, the markets have trended higher during this period. But this current path of the last few weeks has left many feeling concerned about recent volatility in particular. I just recently spent a week or so in Chicago at a wonderful financial services conference, which was not only highly educational, but introduced me to some new technology and software as well. And over the summer, as you come in for your quarterly meetings, we'll be talking to you about our new risk analysis software, as well as answering any questions that you have regarding how to take advantage of the market's current volatility. Now, back to Trump. You see, the issue with Trump in this latest round of heightened tariffs is that the two companies that are being hit the hardest are Boeing and Apple. And both of these companies are two of the higher cap companies that move the Dow Jones Industrial Average the most. So as long as this trade battle goes on, I believe we can expect volatility in the market. Now, from a short-term view, this doesn't feel good. Something's wrong if the market's going up and down all over the place. And if you look at your accounts more than once a month, then you will notice these swings that are happening simply because the news headlines that actually have nothing to do with the financial health of the companies you own. But I'd encourage you to take that long view. We're still in growth mode. We're still seeing record unemployment in this country. And this is probably the U.S.'s best chance to impose our will on China in trade negotiations. Will it work? Well, that's the million-dollar question, and I have absolutely no idea. But the uncertainty in these trade talks is no different than the issues and concerns that we talked about during your initial meeting with us, where we talked about what we've done in the past and where you want to go in the future. I know for many of you, whether you knew us socially or just met us based on a neighbor's referral, that conversation was pretty difficult for you at the time when you stepped into our office because you felt like you were literally bearing your soul. And that's normal, whether you're switching to a new financial advisor or choosing your first one. As we reviewed your situation, however, and we made recommendations and put a financial plan in place for you, we had no idea that the markets would continue to reach those highs that they have in 2019. But they have. Prior to the last 18 months, it seemed like the markets had gone straight up for basically 9 years straight. And while they're still trending up, the way it's moving now is 7 days up and 5 days down, or 14 days up and 3 days down that wipe out all those 2 weeks of gains. These moves may not create confidence in the financial system, but this is the way it may stay because we are in a computer algorithm-driven market. I still believe that we're in a healthy, growing economy, but just like all of you, I don't claim to have any idea where this market is going in the short term. However, if you put a gun to my head and ask me where we'll be by the time ads for Trump's re-election campaign come out, I believe that the market will be higher, not lower. Now, that doesn't mean we're 100% invested in your portfolios by any means. For the majority of you, we have raised between 15 and 20% cash, and as the volatility hits, we have enacted stop losses, so if the market continues to trend lower, those losses shouldn't significantly increase. But at the same time, we're looking at the markets on a daily basis and across accounts, and we are putting cash and new money that you send into your accounts into the markets on days when the volatility seems just too extreme. So take a deep breath, plan for the long term, and as always, please let us know where you have questions or concerns, and we'll help you with an answer. We're just a phone call away.